The interest rates are likely to rebound at least in the short term, but I think the bigger direction for the interest rates is indeed down. Again, we're seeing record highs for stocks, gold, and high-yield bonds. News be damned, we're just going higher and higher. Also, gold miners hit an all-time high in a pretty spectacular move. And we will also look at two examples of recent trades that I personally took for Intel and Lyft. So stay tuned until the end. If you could please hit the like button, share this video, make a comment, even put a smiley face or a thumbs up in the comment section. It will tell the YouTube that this video is important and should be promoted. Thank you for that. If you're a subscriber, stay tuned. You can see we have a very large selection of speculative securities, so to speak. And you can see we have some of the ETFs and large cap stocks, but you can see, but there's a ton of speculative securities like Clean Energy, Orchid Island Capital, Herbalife, Cleveland Cliffs, Editas Medicine, as well as Esperion Therapeutics. So stay tuned if you're a subscriber. If you're not yet a subscriber, consider signing up by going to the link in the description, masterchartstrading.com. Let's look at S&P 500. On this chart, as always, I'm using my proprietary price action indicators, which you can see on this line as green, blue, red, and yellow lines, which are available for tradingview.com. So what are we looking at here? First of all, this is a record high for S&P 500, and you can see that this move was pretty spectacular from this total meltdown in April until now. Basically, there was no pullback. We just continued higher. We still have gaps that are not filled, and we don't know if they're going to be filled or not. You can see there's a bunch of gaps. There's another gap right there. Will they ever get filled? That's a good question. They say that market hates vacuum, and that is possible that we'll get those gaps filled, but when they're going to be filled, it's anybody's guess. So we can actually kind of look at kind of longer term perspective, and I've shown this chart in the past. So we can see that this V-shaped pattern started in January of this year. Bottom is in April of this year, and the top is in June of this year, with a new breakout in late June, which continued higher. So the depth of this pattern is about 1,300 points, and the 1,300 points duplicated on the upside would put S&P 500 into 7,500 territory. So that's another, from today's price levels, that's another 12% or so. So can that happen before the end of the year? It's possible. I mean, the way things just continued higher, we could just continue higher and not really pull back in any meaningful way. For me personally, I don't want to be buying up here, so let me just show you my position in a major ETF, and that is Nasdaq QQQ. So I bought it back in May of this year, and if you look at this chart, it's pretty obvious why I bought it. The only reason why I bought it is because the price closed above my blue support resistance indicator line, where I'm hovering right there on the May 2nd or so, May 2nd, May 3rd, May 9th. And that was basically the only reason why I bought it. I mean, I don't really care about what the earnings are and all that. I only care about the technical picture. The technical picture back in May showed me that yes, indeed, we're breaking out into a new uptrend. We should be buying I went ahead and I bought it. I'm sitting still in the position, full position of NASDAQ without really making any changes, and that's a 22% gain. So, pretty happy with that. And this is the same way we trade, S&P 500. Yet alert was sent to my subscribers right there on May 2nd, and you had another opportunity maybe on May 9th, but that was it. And then it just kept going higher and higher and higher. So where is it going? I already showed. We could see yet another move higher, and it could just continue. We could also reverse, but there is no way to tell this. As always, people think that they can, pick the tops. And when I get to gold miners, I can tell you that I thought that was the top, but it's not. So we're still going higher and higher. High yield bonds, junk debt, ticker symbol JNK, pretty much did the same thing. We had a pretty nice. Also notice that it's very interesting that high yield bonds, whereas S&P 500 actually dropped pretty significantly, and notice it closed below this yellow support resistance line. So that would imply a bear market. But look at the junk debt. The junk debt never even made it that low. So we kind of just got below the blue line and then closed above it. And that was actually the signal to buy. And so if you were, in the market for high yield bonds, that would have been a nice move, and it's about 8% move. Junk debt doesn't move as much as stocks. Stocks moved. S&P 500 moved about 17, maybe 18%. High yield bonds only moved about 8%. Yet they're doing the same thing. So the correlation is very high. So as long as the high yield bonds and stocks are doing the same thing, I'm pretty happy. Suddenly, high yield bonds could start doing something different. For example, stocks are going up, yet high yield bonds are going down. We start to worry. But right now, they're still doing the same thing, so there is really no divergence of any sort, and we continue to think about buying stocks, and this is the reason why we have so many interesting setups right now. Notice how many setups are in the more speculative universe, but there are some still that are, big companies, Honeywell, IBM, McDonalds, etc. So for now, we're seeing high yield bonds and stocks move together in lockstep into the new records, and that's, in my book, a good thing. So no dangerous divergences, and for now, again, we're going to continue looking for buying opportunities within the stock universe. Before we get to the dollar, I wanted to take a look at the interest rates. So we just had a Federal Reserve decision. They did indeed lower the interest rates, and last week I think I mentioned that quite often you want to, either buy the rumor, sell the news, or sell the rumor, buy the news. So in the case of Treasury note yield, the Treasury note yield was going down until we have the decision this week, and then it started going back up. So in this case, we're selling the rumor and buying the news for the Treasury note yield. So if you're buying bonds, it's the opposite with bonds. So if the yield is going up, that means bonds are going down. So I think in this case, the 10-year Treasury note yield seems to be at least wanting to rebound. So in this case, we can actually project my indicators into the future, and they line up very nicely. So notice that this red, darker red line kind of goes up like this, and then it sort of tops out around October, in the early October. So I think that we will see a move higher for Treasury yield, and by extension a move lower for bonds into at least October, maybe early November. But I think that at that point we will judge if there is resistance, and the resistance would be right around the red line. And so if we see that resistance, then we want to be again a little bit later, like around the end of October to early November, to start buying bonds, because interest rates and bonds move in the opposite direction. Right this instant, I want to do probably nothing with bonds, because let's look at 20 plus year Treasury note, Treasury bond fund. This is TLT. So notice what happened. The Treasury bonds came up to this blue support resistance line right there on the 17th of September. We had the decision, and there, it got pushed back basically. We never broke out into bullish levels for this long-dated Treasury bonds, TLT. So I think that, again, a pullback for bonds into October, November is quite likely, and by extension, the interest rates will likely rise into October and November. But I think in the longer term, the path for interest rates is down. All right, let's look now at the dollar and gold relationship. So dollar has hit a new 3-year low on the day of the decision, right there on the 17th of September, Wednesday. I was telling my subscribers that if we break below this July 24th low, and we did break below July 24th low, then I think we will see a new, fresh 3+ year lows. And indeed, we did that. We broke below that level. Now we're slightly rebounding, but I just don't know how strong this rebound will take us. Where will this rebound take us? Right now, even the yellow line is producing resistance. So that's very, very weak bounce that we saw back in July. I think something of similar nature might occur, but even if we see a strongish rebound, like the one that would continue to the red line, I think that the resistance will most likely reassert itself, and at the very least we will see prices come to the red line and then possibly bounce back down towards the lows yet again. So we're watching the dollar quite closely. Dollar has been dropping. Dollar has just hit a fresh 3-year low. So by extension, gold has been doing quite well. We've been trading gold obviously for many months, if not years. And notice that's previous. The last opportunity was back in February of 2024. So over a year and a half actually ago, there were no opportunities. We just saw non-stop price appreciation. Why do I say there were no opportunities? Because notice that there were no touches of this blue support resistance line. Whereas back in July of 2023, back in 2020, early 24, we saw touches of the blue line, and that's exactly where we want to be buying. So now we saw, fresh highs. I wrote here, are we topping? No, we're not topping. We just continue higher. We just made new records, all-time highs for gold. Gold miners also were just on a tear. I thought on multiple occasions, if you watch my videos, that we're done. But today we saw yet another push to all-time highs, a very big candlestick. Could this be the end? Maybe this is the buying climax finally. But no way to tell. What if we continue higher? What if this is not up? There is no way to tell. So for now, we're seeing our positions appreciate quite well. Last opportunity to buy was in May of this year, right there where I'm hovering. So if you did buy gold miners GDX, then you're up 56%. And all you needed to do is just have my lines on your chart. Again, they're available for tradingview.com. Congratulations if you did indeed open gold miners. And now I wanted to show a couple of trades that I personally took. Here's Intel. Now, again, I don't follow the news to the extent of they would make me make decisions about the trades that I do. I follow my lines. And up until very recently, Intel was in a, down in the dumps. Basically, it hit fresh, 52-week lows, and it was nobody cared about this stock. Until something happened, and we saw a move higher, right there. Right there where I'm hovering. Suddenly the Intel went higher. On 14th of August we saw a breakout above this blue support resistance line. That's basically all we needed to know. That means that at this point we see the stock has changed its nature and it's no longer in a downtrend, and now it has entered an uptrend. So I went ahead and I personally bought it here on the 4th of September, a few weeks ago. And I just sat in the position. I didn't know anything about, that government was trying to take a stake in Intel, and I didn't know anything about, yesterday's announcement about Nvidia taking a 5 billion stake in Intel. So none of that was obviously news to me. But all I needed was the fact that we see a close above the blue line. That's really all there is to it. And, that's a nice move right there, 25% move, nice big gap. I mean, we might get a pullback, towards the blue line, but that might be, again, a buying opportunity. So, looking very good. Again, if you opened Intel recently, congratulations. Hopefully, this will continue even higher. Another one of my personal recent trades is Lyft. And, sort of similar picture. This was not as clear-cut. So right there where I'm hovering on, in April of this year, Lyft hit a 52-week lows, I believe, or very close to them. Then a few weeks later, we saw a move higher and a big gap on earnings. So earnings came in pretty good, I guess. It gapped up and closed above the blue line. So to me, even here you can already buy. But I didn't really like this gap, and I sort of wanted to see it closed. And notice that it did indeed close. So where I'm hovering right now, back in August, we saw a pullback towards this gap area, and I went ahead and and that's exactly what happened. The position, or rather the gap was closed, and I'm like, okay, this is pretty good. I'm interested. And so I was waiting for a next close above the blue line, and indeed it came a few days later, right there where I'm hovering on the 15th of August. And I went ahead and I bought right around there, and now it just skyrocketed basically. So it went from like 15 to 25, 22, 23 or so. So that's a very nice, 47% move for Lyft. So again, some of my subscribers went ahead and they opened Lyft. So congratulations to that. And if you have opened any of the positions that I am referring to, please make a comment in the comment section. This would actually mean a lot to me. And that's it for this week's recap. So head over to masterchartstrading.com, click on sign up for one of the products. So again, this trading indicators, this magic trading indicators that you can see on this line, on this chart, these lines, the green, blue, red, and yellow line. That's actually all you need to do is to trade using the indicators. You can trade just like I'm doing right now without really worrying about any earnings report or any management shakeups and all that. It's already baked into the price. You can see it on the chart. So as long as the stock closes above the blue line, you just buy it right around that area, you should be fine. So that's the trading indicators. They're available for tradingview.com. This is tradingview.com interface. Newsletters, so I send out daily alerts and weekly members-only videos. Like I just said, there's a ton of speculative securities this week in the members-only video. So if you wanted to see that content, please sign up on my site. And of course, the best deal is to get both trading indicators and newsletters. That's the especially if you get the yearly price, $49.95 equivalent per month, and compared to the monthly subscription, that's a nice 17% off or 2 months free. That's it for this week's recap. Again, don't forget to hit the like button, share this video, make a comment, and thank you for watching. Have another great trading week. Bye-bye.